Yeah. Hello, everyone, and welcome to another live session here on YouTube for Pepperstone. Today, we're going through the live markets, and boy, oh boy, is there a lot going on. We've got crypto getting sold off pretty heavily through a major support. So it'll be interesting to see how that plays out over the next 24 hours. We'll give us some opinions. And then, of course, we'll go through the US 500 into earnings season, what's going on there, and the volatility coming out across the board, leading into kind of gold selling. And also US oil and dollar index. As always, I'm joined by Ty and Abella. How are you going this week, Ty? Vol came back a few weeks ago and it hasn't left yet, has it?
It's very exciting, Thomas. Very, very exciting. I think that we're starting to see some really positive signs. I think the market's doing what we kind of wanted to secretly. And yeah, first day of May, and we're starting to see a little bit of a sell-off already. So yeah, really looking forward to jumping in tonight and really analyzing what may or may not happen, given that we've still got a few more important earnings announcements to come out.
Yes. So look, it's potentially that sell in May during a presidential election year that does happen when we have a strength kind of lead in. So April wasn't very good. Now we'll see how May goes. Then maybe June, July will even be, more positive than it is right now. So as without further ado, we'll just quickly put up a risk warning. We'll come and see you guys. And remember, if you like this type of content, give it a thumbs up. And also post your comments throughout the stream, and we'll answer them throughout and at the end as well. So if you have something you want to ask, feel free to do it. We'll answer that. See you in just a moment. Okay, so Tyrone, it's been a very volatile period. We'll go through what's going on with crypto in just a moment. But of course, the US dollar is facing one of its biggest weeks. We've got what we call jobs numbers, non-farm payrolls on Friday, which tends to be one of the largest economic reports. And then, of course, we have the FOMC in only a few hours today, which kicks off at 2 p.m. New York time. And then there's a press conference that can often undo all of that at 2:30 p.m., where Jerome Powell will come out. Now, the general gist of today's session is going to be that most people are expecting him to be hawkish, which basically means the chances of a rate hike might be there rather than rate cuts, which is what everyone originally thought, and that we're probably going in the middle of kind of all of that. So at this stage, you've got to be very, very careful with what's going on in the markets. I could see a case for both. I probably think it's going to leave, sit and do nothing. I think that's 100% of analysts that are covering it believe it's like that. But in terms of hawkish rhetoric, that will be the discussion point for the markets. Instead, what we like to do on this show, though, is to follow the price action. So we like to say, okay, well, here we are. We're using a dollar index. Where, if it breaks to a certain level, what becomes the more likely technical advance or technical decline? So in this case, Ty, we've got a pretty strong looking US dollar. Do you think if it breaks through, I've got like a red box here. I've talked a lot about 106.50-ish to 107. I feel like if it breaks through there, the next move being a potential flag pattern here could be all the way into 108. How are you seeing US dollar? Because it's probably one of the most interesting at the moment.
It is. And I like that flag. I know we drew it up last week and it has broken to the top side. What I love about flags is the fact that the flagpole is generally going to be replicated in the move if the flag pattern plays out. What we're seeing here is the dollar index trying to get to the top of that flag pattern. And quite frankly, it has to break through that rectangle box that you've drawn there, Tom, in order for it to hit our criteria for a flag that's really going to be playing the game nicely. So I think that you're right. I think if we get a break above that red rectangle that you've got drawn there, that's going to break above the top of the flag. And the good thing is there's still a considerable amount of movement left in it. Like, it's not like it's going to peter out and not give us much. If this flag pattern goes all the way to fruition, we're talking about potentially, a 108 to 108.50. So I think it's good moves here. But it's at a very important zone. There's no question about that. That 160.20 to 160.50, 106.50 area is extraordinarily important. We need to break through it. And if it does, I think it's happy days with a really strong potential for a move up to the 108 and above.
I feel like the chances of a downtrend is also a possibility, obviously a failure here. So we like the break above. If that happens, then probably more strength to come. But if the news sends shockwaves through the dollar and it ends up moving below the 20 moving average here on the daily, which is, by the way, held it once, twice, and three times. So we know it's a 1-2 pattern that we often talk about on the channel. We've gone back and we've actually got a 1-2 strategy on Pepperstone's channel if you're interested in looking at it. So the 3 hit and it went positive, which is what you expect. Then if it comes back down, it breaks below that zone, all of a sudden we're taking out the flags. They would therefore getting squeezed if they didn't take those. Oh, it's a flag is a coil, isn't it, Ty? It's a pullback in price, pullback in time that's actually quite condensed. So yeah, I think that either move could be quite ferocious, and that leads us into a couple of other trades. So of course, if we have a look here at Euro US dollar on the charts, that's been leading into all sorts of up down and all around action. How are you seeing the euro? Have you got any good read on this? I'm not sure if
yeah, look, I think that the euro is looking extraordinarily short in terms of what we're seeing here. Look, it's had 3 good swings all the way down, no question about that. It's found resistance at the 20 moving average every single time, and realistically similar to the dollar index in the sense, obviously this is the inverse of it. If we see a break below,
hopefully we can just drop, guys. We'll just quickly check that. I'll just quickly check the live stream just to see where we're at, because I think we might have dropped there for a second. We're back. Oh,
you don't seem to be moving on the camera. Are you there, Tom?
No, I definitely dropped. Okay, I'm back though. So, all right, our thoughts on the euro. Let's get started again.
All right, I hope you're still there because you're not moving on my camera. So
yeah,
I hope that you're live. Okay, maybe give me a wave because you're looking very, very upset and not moving your head. Okay, well, yeah, Euro USD.
We're live. We're fine.
Yeah, okay, Euro USD. I reckon that it's done all the right things from a technical standpoint. It's found resistance where it needed to find resistance at the 20 moving average again. I think that a 106 move is the end of the support. If it fails to hold there, I think we've got a decent move down to that 105.20. It's going to correlate well, obviously, with the dollar index strengthening from the top of that flag that we were just talking about a second ago. Mm-hmm. But yeah, I like it for another swing down, to be honest. Both legs have been equal, and I like a move. A third swing down would really go well to the 105. So that's how I'm looking at it. And it's given us no reason to think otherwise, to be truthful. Every time it's got to the 20 moving average, it's failed to get past it. We're seeing wicks above it. And yeah, really, really decent chance. But my trigger point would have to be below the 106. I think the 106 is a pretty significant support level for it. Just like the top of that flag is resistance for the dollar index. But a breakthrough there on a daily chart, and I would be starting to target the low 105s on this one.
The high to the low, and I just kind of measured that pullback there. You'll notice it's the exact same length. So therefore, it kind of becomes a self-fulfilling prophecy that you could kind of go, okay, well, this would be the pull. Now, Ty said 105.20, and I think that's a very telling point, guys, because if we generally on the third one, whenever you see a pattern like this that's kind of replicating, I find the third leg never goes to full completion. It usually pulls up a little bit short, doesn't it, Ty? And that's something that's very interesting and worthwhile keeping on your overall analysis when you're doing it. So, yeah, if it is doing a pullback that is in equal lengths, at this point, though, I think that it more than likely will stop somewhere around that 105 kind of 20 to 50 zone. All right. Well, we'll keep going. So next one is, of course, let's go over to the crypto because that's what everyone wants to talk about, I'm sure. So this is what we kind of feared when we've been talking about this for a while. A lot of difficult trading within crypto that's turned into what I would say is a pretty big drop. Now, of course, Bitcoin is going through 60,000. That's what it's done. And it's leading on to further selling here across the board. And it's a mixture of things. You've got got to remember on the left-hand side, there's explosive in anticipation of the exchange traded fund coming up. And they did come out, and then it went up a little bit more. And then, of course, it's going sideways here. But it kept making a series of lower highs. And in many ways, this fall is kind of possibly set to go to the most traded level, which sits around 52,000 on Bitcoin. So it's hard to tell exactly where the buyers are going to pick up on this again. But yeah, that would be kind of the way that I would look at it. Let's have a quick look here and make sure we've got all sorts. It must be like almost like a, it is still stuck. Why is this happening?
Yeah,
sorry,
Bitcoin,
guys.
Bitcoin's up now. We can see Bitcoin on the chart now.
Yeah, you can see Bitcoin, but it's just I've just lost all connections. I've tried 2 connections so far. Oh well. All right, we live? I hope we are. How frustrating. Sorry, guys. Yeah, that sometimes happens, you know. So 60,000 obviously broken through. Closure below, big deal. But in general, just going through 60 is a huge one. So this is pretty much where we're moving on the downside. So as I was mentioning before, and I guess I went through it already, is because we got through 60, the opening of a 52,000 becomes more or potentially more likely. This is the most traded zone on the way up. There's basically no shelves here. Now, what I mean by shelves, I'm going to use an indicator called the fixed range volume profile, and I'll just show you between here and here. Whoops, we'll load it back on there again. So we'll load it from here to here. And what you'll notice is there's actually not that much trade through a lot of this. There is a little bit of trade here where it's come to. So this is the 57,000. And then there's no trade underneath 57,000, very little volume that went through this point. So effectively, we're looking at further weakness into the most traded level. Now, at this most traded, so this is a key point for it. And then, of course, the 52,000 is a key point as well. And to pick a dip here is really just going to be for position-based traders. So we have, you know, yeah, 1 second. Ty, can you just take over for 1 second?
Okay, so I'm gonna stick on. I've got the chart up now, so hopefully you should be able to see the Bitcoin USD chart again. Obviously, the level that we're talking about here is the 61,000. We've obviously seen a very, very clear break. And yeah, what Thomas is trying to say is the gap between where this has broken through and the next real support is around that sort of 52,000 marker. And there's no real support that we can actually find on the way down. Okay, so that means that basically it got there in 3 candles, and there's a very high possibility that it can actually get down there very, very quickly. And if it does that, look, the only place that we can really find, I mean, what Tom refers to as a shelf, is actually a support level, and that was this previous resistance here. Now, I know we have talked about this for, I guess, most recently over the last few weeks, that if we did get a break of this level, this is the most likely target, and it has now happened. And it is coinciding, obviously, with the markets coming down and a few of the indices coming down as well. So, you know, whether that is directly related to what's happening with Bitcoin, I guess, yeah, there's lots of moving parts, and we also know that it is, it is its own beast in a way. I mean, it was going up when the indices were going down anyway. So we have to just assume that now that we've got the break well in place, if we're looking at trading this, we're going to jump into the smaller time frames and hope that we can actually get a pullback to a 20 moving average. So anyway, obvious target down to that sort of 52,000 is what we're looking for. Continuation of the lower high, lower low sequences on a smaller time frame would get the job done. And when I'm talking about that, I'm talking about like a 1 hour time frame. So we could sneak over to a 1 hour chart. Any of these pullbacks that we're seeing, if we see a pullback back up to around anywhere, the moving average is a fair bit away now, so we're gonna have to go probably smaller again to a 15-minute chart. But as you can see, every single time we touch a 20 moving average, it was a reasonable sell point, and it's given us some pretty good entries. Okay, so we've even got an evening star pattern here on the 20 moving average, which is pretty cool. So I'm not sure if Tom can actually see my chart, and I'm not sure if he's actually there. Can you guys see my chart at all?
Yeah, you should be live. You're live.
Yeah.
Yeah.
Warwick, it's not too hard for me, mate. I'm pretty sure I got it covered.
Yeah, you got it.
Loud and clear, and you can see it. Great. Okay, so yeah, this is what we're talking about. Warwick, Yeah, absolutely. So look, you go to the smaller time frames. This is how we trade it, right? Because we can't. If you're looking at the daily, it looks very daunting. All you're seeing is a big red candle, and you think to yourself, well, how do you get involved in that? Of course, how you get involved is going to the smaller time frames and looking for those pullbacks to a 20 moving average. Absolute trading 101 from a technical standpoint. And when you're getting an evening star, Tom, on a 15-minute chart at a 20 moving average in a pretty heavy downtrend, we call that happy days.
Yeah, there's another thing I want to mention. I obviously don't have the chart on me because we're having a bit of technical difficulties, but you can actually put in a correlation coefficient. I think you mentioned before, Ty, the idea of the market being kind of correlated to maybe Bitcoin correlated to the NASDAQ. So if you actually go up to indicators and you type in correlation, we can actually add in, this is just something that I think is really handy. We like to give extra tips here on the thing. So we type in correlation coefficient, there it is. Click on that one up the top. And if you add that on to the selected symbols, so in this case, you could select so just type in US 100, and we can actually see how they are. So a question that a lot of people have is, well, maybe Bitcoin's correlated to the NASDAQ, or maybe they're moving in unison or anything with each other. So you can just select any of those. Just select the top ones. Fine. NQ futures is fine if you want to. Obviously US 100 you could do with the Pepperstone platform, and you'll notice here that you end up getting like a bit of a idea on how correlated they are. So sometimes I would say that they're very correlated, sometimes they're not so correlated. So this is a very fair thing to do where you're maybe looking at an upward trend, because basically crypto is considered risk on. So if you've got risk on NASDAQ, and then Bitcoin's also showing risk on, they're showing a strong correlation. But in general, they do sometimes have correlation. And when that's good, it's good. And when it's not, it's not. And you can use something like this to figure out. Okay. You should do that with other things as well, like dollar, S&P, sometimes correlated, those types of things.
Yeah, so everyone saw how we did that. So you go to the indicators and you go, basically you type in correlation at the top here. And that should, if it doesn't bring it up, you can just type it in completely. But as you can see, it's sitting right there. And then you can pick your symbol and you can do that against any of those. So the white background is hurting your eyes, Warwick. All right. All right.
Well, I think
let's move on.
Probably back.
Why don't we look at a couple of indices?
So do you want me to just pop on over here because I've got another chart?
Yeah,
unless you've got something you wanted to mention there, Ty, about that one.
No, you can take it over.
Okay.
I don't want to hurt Warwick's eyes with my white chart.
I'll add this and we'll keep open. So this will come up just here for a moment. All right, let's see. There we go. Should have flipped over. So we'll just quickly do US 500 because it's, of course, an incredibly important chart. The only reason I'm going over to it is because I've got a lot of lines here. And I want to talk you through each one of these lines. Hear me out. There's a couple of things here. We can delete a few of them because I was playing with some ideas before.
We can't. Unfortunately, it's not very messy at all, Tom. It's all we're seeing is a black screen at the moment, Tom.
Oh, really?
It hasn't come across, unfortunately. So all we're seeing is a black screen.
Okay. If it's not coming up, it's not coming up. Oh, well, sometimes that happens. We'll go back over to Ty's screen and we can go through the S&P. There we go, guys.
Yep.
If it's broken, it's broken.
Let's look at the S&P 500 because it's obviously a very, very... Yeah, look, sometimes the internet connection is pretty ordinary. So look, it doesn't matter. We get that sometimes. We are in Victoria and we are the worst internet state in the country and probably one of the worst in the world. That's okay because we've got white screens here and in Ocean Grove, everything is good. The S&P 500 is definitely tipping over at that 20 and 50 moving average. There's no question about that. If you did a Fibonacci retracement for either the entire move or even the last swing, you're going to get a very, very efficient level to sell off from at this point here at around that sort of 5,100. I know we talked about it in quite a good deal of depth a couple of weeks ago, Tom. And it's kind of really played out quite well because it really landed on the support level that we needed it to land on around that 49.50, then pulled up. It's a 38.2 or a 50% fib, depending on which one you draw, on which leg you draw, but it certainly did the job. And look, we are in the midst of earnings. We've still got some very important earnings to come out, obviously. After this week, I've been saying in my streams that I think that the markets will start to really show us where we're going to be, probably mid-May. I think we need to get this week out of the way a little bit. So it wouldn't surprise me to see this volatility continue until, at the very least, we see that the majors, it's a very broad week of earnings in terms of a lot of the smaller ones. So I think it's an important week to get out of the way. But in the meantime, we're going to watch with great interest as we approach non-farm payrolls on Friday, because we're already starting to see the weakness. And realistically, in my mind, if we do see a break below that 49.50 again, and if we get that, and that could happen very, very quickly, as you can see, we've already made up half that distance in one day, and it could easily be there in a heartbeat. It's only 60 points away, right? Just a bit over 1%. If we see a break of that level, I think it's a telltale sign that the market weakness is really set to continue. We've got some very, very big trends happening then, and that is a dead set reversal of what has been an extraordinarily long trend. Once we've got that in play, we're going to have the high, the low, the lower high, and then consequently the lower low. And that is a major trend reversal. No worries about that. We've marked out the 4,800 as probably the level that I would expect support will be at. The first level of support at the very least, I would imagine, but also the 4,600 as a secondary support, probably as equally as strong, maybe not quite as likely to get there because that's going to be a pretty significant market correction. But either of those zones could provide very, very good relaunch zones for the S&P 500. But in order for it to be, or in order for me to be comfortable that we're going to approach those levels, I would like to see a daily close below the previous low.
Yeah, I agree. The 20 weekly is a huge deal. Obviously, you've got ribbons there of the 20 and the 50. At the same time, around that 5,100 zone on the US 500 also was a switch to what we call positive gamma, and we've moved back down to negative gamma. Now, Ty had the 20 daily. I would actually put the 20 daily on your charts, and what you'll notice is it hovered between the 20 and the 50. That area is also, as I said, the gamma switch. So if we move back up to above the daily 50 moving average, that's also going to show us that the market's happy to go, I think, furtherly in the bullish side. But yeah, I've got the same zone. 40. 47.50 is where the 50-week moving average is. Like we'll get some of the other previous bull runs in weeks. You'll notice that there was a long time there. So we go right back in history, back into maybe 2018, 2017 runs, so even further back. You'll see there are times when the 50 is well respected. So that kind of run there, about 2018, 19, you'll notice there are a lot of hits to the 50, in particular that last phase there before the whole COVID crash happened. We got 1, 2, 3, 4 hits to the 50 moving average on that right side. That was actually just the preferred pullback area. And this is basically, we like the 20, the 50, and the 200 for a reason, because you'll notice that when you put them on an S&P chart and go to a weekly, those levels tend to show incredible respect, and they're very good for traders to then go and look on small time frames. And if you get the direction right in those points, then you can actually descale your position and hold it. Remember, there's a great thing for traders where if you hit a 50 weekly moving average and you get a turnaround on a smaller chart, it's not just like, oh yeah, scalp in and out and then, all great, because that's actually a way bigger zone. And I remember, Ty, when we first got into trading, there was this guy, I think his name was Rob. Remember Rob? I think he's some New Zealand guy. It was a long time ago. Wow,
I do remember Rob. Yes.
And this Rob guy, anyway, I remember he used to like hold positions, and he used to be in them for in currencies for like 500 pips and stuff, which was quite a lot, 500-600 pips, a couple of cents, 5-6 cents. And I remember thinking, man, he's doing this execution on the small time frames. What's he seeing that everyone else is? Now, whether he was or not, what I think is the 50 weekly moving average and 20 weekly moving average, specifically the 50 and the 200, if you get into a great position, I think descaling your long, if you get into a nice long run there, is a better play than just to go, okay, I'm in scalp, day trade, or what, in and out, because those are the ones that can go to like 10 or 20 to 1. I still remember he was going on about how he had 100 to 1 trade. Yeah, it was funny, but that's what you're looking for sometimes. Recognize the opportunity also of the gravity of that level.
Yeah, I think it's very, very important to really highlight, though, like Tom said, the 20 moving average on this weekly chart is an extraordinarily strong zone. You can see that now This is our third week that we're approaching it. Reasonable chance that we'll be sitting on it at some point throughout this week. If that does get broken, it really does open up. And I think you can probably see the 4,800. I mean, it's hard to see on a daily where the support really is. But look at this resistance right through there, way back in December of 21. And also around here in December of obviously last year, it had problems getting through that zone. Highly likely that if we do get a weekly close below that 20 moving average, and we're talking about below the 49.50, that extra 150 points could gravitate there. So very significant levels, and going to be a very interesting week, no question about that.
Yeah, so watch that 20 weekly, guys. Also, look at that correlation coefficient, Ty. You'd assume that the Nasdaq's always strongly correlated. Not so when you actually go through those time frames. So that was interesting. All right, let's move over to gold because, of course, that's everybody's favorite. Well, we've been talking about it a lot. Obviously, quite bullish feeling on gold. And we do remain bullish overall on gold moving forward. It's trying to hold on here. I think if it gives up this position and let's say the dollar was to go long, you can delete that, yeah. The dollar was to go long, then gold would probably suffer quite a lot. And you'll notice that we've had a wick here. We've closed down to this point. It's possible it bounces here. I'm not loving it. I've got to say I'd need a lot more. I'd need it to get back above 2260 for me to actually want this again into the bull side, other than the long holds. But 2200, 2180 that you've kind of got leveled there, Ty, those levels interest me a lot. I would consider them an incredibly good bull zone if we were able to have a bit of a sell-off on gold. And remember, even from the low all the way to the high, that would only put it back to, 50 fib territory.
Yeah, correct. Yep. Now it does worry me a little bit around this level. I think I would be much more comfortable if we were hovering around this level here, around that sort of 2180 to 2200 zone. Find a reversal there. If we see some support, it's like say a series of higher highs and higher lows, say on a 1 hour even, that will probably get the job done. I would be quite comfortable with that, and I would be looking for potential long opportunities all the way to these new areas. But because we've had such a big move up, I don't see anything that can really hold it here. There's only thin air, Tom, as we call it. So, realistically, we do need a level that we can actually see and feel, which is this level here. What we know for sure is that we spent the best part of March in this level. We got a March to April. We basically traded there for a very significant period, and that's not to be ignored. So, obviously there was good buying there, and that would be, I would expect, the next level of support.
Yeah, I really like that level. I would consider it very strong if it does come down. But for now, it has to show us that it really wants the bull, and the bull's not going to really come through, at least on these higher timeframes, until 2260. And that's called buying the V, not buying the dip.
Yep, correct.
Do you want to take a look at US oil? Bring up US oil for us or something like that, because
love US oil.
Oil's looking a little nasty.
Lovely.
This is also down, very similar to gold in some ways, at the key level. Breaks below here. I don't think there's buying. I've said great level 78 a barrel. I really like 78. Very strong zone in my opinion. You've got just underneath there, Ty. Obviously, you agree. We didn't correspond with this before, but
I think that's funny because obviously we're using my chart today.
Incredibly interesting, tasty zone for me. Do you think this will hold here?
No, I don't. And I actually thought and traded with the community that we do, like my stream. We shorted the aggressive head and shoulders pattern here. This was an aggressive entry for us on the right shoulder because we got the evening star pattern on a right shoulder, which we were very comfortable with. And that was obviously a trade down to the neckline, which is already closed out now. But realistically, if this pattern were to fulfill its destiny on the daily, it's going to go straight into Thomas's hit zone around that $78 a barrel mark. So realistically, I like this for a number of reasons. One of which we've already got the aggressive entry. But I think that there are a couple of different ways that you can look at this. I think if we do get a break below that sort of 81 level or 80.50, I think that you're right. There's not a lot catching it all the way down to this level. So no. I think it's strong. And this was actually my trade of the week because
whoa. He just stole it from me.
I can't help that. I mean, at the end of the day, I can't control I can't control your
That's so
internet, and I can't control.
That's
You know,
terrible. Why would you do that?
look, yeah, I think everybody could well and truly see that my neckline was already drawn well before you started to talk about it.
Yeah.
So, yeah, this this head and shoulders pattern is what I'm really liking. And look, we love, like we've talked about many times before, when we can see a chart pattern and it plays nice with an expected target of a very strong support zone. I mean, Tom mentioned the $78 and $77 a barrel marker, not just because of a head and shoulders, but because it was actually very strong resistance prior. So, yeah, we would expect that that's going to be support. And when a pattern does actually play out like this and its projected target is a very strong level of support, it just gives it a lot more strength.
Yeah, I like the oil trade. It's very interesting. And
all right, well, then we can say, look, we'll take it together. We'll say that this is our trade of the week. Yeah, we're quite comfortable with it. And the $77 to $78 would be the target on this one. I'd like to see the daily close below the neckline. And even if it did close below the neckline a little bit, came and touched these wicks over here, then rebounded a little bit and actually found resistance at that neckline again and gave us a conservative entry, I think I'd be perfectly fine with that as well, Tom. I wouldn't mind. We don't need to see just one big red candle all the way down. If it does break through and test this level again, there is a number of wicks here that can cause a few issues at around that sort of $80 mark. You can see right through here and through here. Okay.
Mm-hmm.
So if we see a move down to there and it does kick back a little bit back into that sort of 81 to 81.30 zone and then falls over underneath the neckline, that would make me equally as happy.
Now I'm looking for another trade of the week. All right, so I'm just having a look around here. I think I've probably got an interesting one, and it's for a stock that just came out and went ballistic, which was Tesla. Now, did about 39% to 40% in 4 days, coming off Elon saying a whole bunch of stuff. Then got FSD approval inside of China, obviously hit into just sub 200. I actually had a level sitting right at 198.50 area for a TP zone and just managed to smack that almost perfectly. So that was nice. But now it's coming back down. Now, I've actually got a level here, Ty. You can put that on the charts, 173.26. So 173.26. Now, we're pre-market 178, and I expect it to probably want to sell more. At 173.26, it's actually the most traded zone in that left-hand side structure. Now, what that tells me is that it was respected once before. It took a squeeze to get past at this time. So there could be a position that starts to be entered into around 173.26. So it's not so much that it's at the trade. I don't know if it's going to exactly bounce off that zone straight away, but what I'll be looking for is edge. And edge generally is created through market structure. So I'd like to see market structure come in around 173.26. Otherwise, if it just keeps falling and falling and falling, the next zone would be around 162, which would be the 61.8 of the low to high swing. I do fundamentally believe that we've changed trend here on Tesla to the upside. Worst stock of the year in the S&P. I think it was down 42% at one point, Ty, from top to bottom for the year to date. And that's terrible. And frankly, it's become an AI company. Now, it's not about cars anymore. This one's going to full pivot. You watch them go. And they're going to be talking about humanoids and humanoid robots and all sorts of things. Now, with an AI stock, I don't think you need to necessarily present actually earnings that much. You just need to present the opportunity of earnings of the future. So Tesla might be going back into its own growth period if it can manage to swing this round. And I will say that it's hard to bet against Elon, Ty, because in the past, what's he got? 5 successful companies.
Yeah.
And every time he almost goes bust, he pulls the rabbit out. He did this with Starlink at the moment. He's done it with obviously what was it? SpaceX. SpaceX almost went bust several times, and Tesla almost went bust several times, and he managed to pull it out. So I don't know what it is about him. He must be just absolutely epic when he puts his eyes on the prize. But I feel like he's back on board the Tesla bandwagon. Maybe he wants the $50 billion. So yeah, 173.26, 162, 2 areas that I'll be watching very closely for bull market structure. We'll see whether we find it.
Yeah, no, it's a very, very interesting one. Another one that we've been getting quite a few requests for, and I know Tom's got a very strong opinion about the financials in the US and across the world. And JPM is one of my favorites. It's been a technical analysis dream for quite some time. I've lost all my moving averages because of Tom, because I was trying to do something fancy for him. I've lost all my moving averages, but I can assure you that the moving averages that we had were very, very closely aligned with price. Now, what we've seen here is, one thing Tom will tell you that the financial system is probably, actually, I'll let you explain, Tom. Can you give us a bit of a brief synopsis on?
Yeah, so financials need to be watched. There's basically three main markets that you want to watch over the next couple of years. You want to watch financials, so obviously things like JP Morgan, XLF, just so you can chuck it on. Then you'll also want to be watching home builders as well, because we're in expansion phase of infrastructure builds, whether that's good or not inside of inflation. It causes inflation, but anyway, it is what it is. And then you'll also want to be watching the Dow Jones Transportation Average. Now, the DJT's been doing kind of poorly, but financials have been leading this market. And I think they are actually the best performing main sector over the last 6 months in markets. That's unbelievable when you think about it. That when you take out, you can't have semis on there, but the major ones that are usually considered. So that's tech, but not semis. That's pretty amazing. So financials are going well. And why are they going well? Well, it's because you've got big spreads on lending. So interest rates are up. We all know this. They might be even going up again. We'll find out. When they go up, they allow banks to make larger spreads. And that's the differential between the current interest rate, cash bank rate, and their lending rates. And they're lending at some exorbitant prices, Ty. So they're making bumper profits. And again, that usually shows you an expansion of debt, which is generally an expansion of the market. So yeah, important from that aspect on the higher time frame macro level. Just something interesting.
Yeah, not most definitely. And look, when we're talking about round numbers as well, we'll just duck over to JP Morgan again just quickly. Prior to obviously the sell-off, prior to earnings, it hit the designated target that we all set for it at the 200. It was very, very well behaved getting up there. The equal swings that we always talk about play out in stocks and indices as much as they do in currencies. As you can see, this swing here is about the same size as that swing there. Now, look, if you look at it from a standpoint of how important the 20 moving average actually is, I think that if we do start trading below that moving average again, I think that we could see further weakness, potentially back down to that 180. I think it's a reasonable level. The ultimate level would be probably 176 because we know that we've got short-term resistance there at that point. So there's a reasonable chance that we're going to find pretty strong support there. But obviously the previous low would be the first target I'd be aiming for. But it's imperative, though, for any bulls on JPM that it maintains its distance above the 20 moving average. If we start to trade on a daily chart underneath the 20 moving average in the next few days, I think it really does open itself up for another $10 move down. And this would be pretty much my first target.
Okay. All right. So JPM, a lot of good stock stuff. Can we go over to one other one, Ty? AMD, just because it's very topical right now. Amazon had great earnings. AMD had poor earnings. By the way, if you're looking at earnings and you like trading stocks on Pepperstone platform as well, you can think about cloud, I think, moving forward. Cloud tech is obviously expanding at a great rate due to AI. So I continue to see that being very, very strong on the horizon. Okay, so AMD here on the pre-market, you can see it's down 6.36% at 148. Now, it's not quite on a new low, but we'll notice on the structure on the left-hand side, Ty, we've got what we call a bit of structure here on the way up. And I think that this market could go to a new low. So it could go like down below 140, whatever it is. What's that low wick? 146-ish, 147-ish. And I'm actually going to mark a line there, and I'm going to be very interested as a day trader how it reacts to that. Now, often day trading is about setting up plans. I like to think of it as like chess, and you're setting up plans. And if the market goes below that level, if it then instantly wicks back up above that level and it creates giant wick, then that could be a sign that actually that just went to hunt people that had stop losses behind there to grab liquidity. Remember, if there are buys in the market that get closed when it goes below, those closes become sells. That sell creates liquidity because somebody has to take the equal and opposite side, which is a buy. So in essence, these are days that I like to mark into the charts and then watch how they react. So I set an alert. If it comes down, then I see if it reacts and comes back up. It's its own trading strat. Obviously, you need to be well aware of how to do that. But this is one of the type of days after a bad earnings result where I like to see it, go towards those zones. And to me, anyway, if you actually pull all the way from the low all the way to the high, Fibonacci from the big low tie where it actually ran all the way from October last year. It probably is a 61.8 just underneath that recent price action. So if we take a move all the way up, there should be 61.8 right around there. Yeah. So again, it's a pretty key level for demand to come back in. I like the left hand side. I just want to know whether it's going to set a trap. So you're always letting for traps and liquidity, and I think AMD is an interesting prospect from that point of view.
Yep. And yeah, look out if it breaks that level. Yeah, look out. Because realistically, the next probably catch point forward is around that 122. So probably a little bit of support here about 135. But if that 20 moving average continues to force it down and it gets past and actually closes below 144, we could see another big swing down. So, and it's been, Tom, it's been behaving itself very, very well from a technical standpoint. All the things we talk about all the way up, hitting the 20 moving average and bouncing off it every time. And consequently on the way down is doing the same thing. So definitely a very, very important zone for it.
Yeah, very strong zone. Very, very much worth watching here, I think, on the charts. Well, it's that time of day again, Ty, where we ask you guys, the members of the community of Pepperstone's channel, to ask us questions. So if you have questions that you want answered, then feel free to ask them now and we'll cover them off. In terms of some of the key things we already covered so far, just remember Bitcoin it's hitting what we call the first wall, just because there's that little bit in there. If we do take the 57,000 and we end up breaking below 52, is what we kind of expect next. US 500 around that 5,000 level right now. We get underneath the 20 weekly moving average and close, then we're more than likely looking at the 50 weekly moving average. And all of these things really are predicated on the FOMC Apple earnings on Thursday. And then on Friday, we've got non-farm payrolls. So 3 major bits of news that are going to affect this market. I think we're going to get direction this week. And Tyron said so before as well. Yeah, absolutely. DK's got a question here, I believe, Ty.
GCT, what do we think about GigaCloud technology?
Okay. All right. So, this is an interesting one. Not something we often look at. I mean, from the perspective of where it's come back down to, I guess you would say, Ty, and I would as well. It's come down pretty strongly to this level of support or demand. The problem is it has come down with some ferocity. It did find a little buy because you can see that in the wick. So somebody likes it here, but it did come down with pressure. That usually means that I want to see structure on the smaller timeframes. What are your thoughts?
Yeah, I would be look. It's an interesting level for it. There's no question about that. And you got to look for when something's gone up so aggressively, which this one obviously has since the last two earnings ago, hasn't stopped going up. Basically, this is the first time that's actually tested some serious levels. And yeah, if you look at all of the market interaction throughout this period, look at all the wicks that Tom always talks about. You've got many, many wicks over many, many periods that have interacted in this zone, which tells us straight away that's obviously a very, very important one. But it's important for 2 reasons. One, if the support isn't strong here and it does fall through it, there's a very strong possibility that, basically 25 to 25.80 is going to be your next target, because realistically, that's where the next price interaction is. And that's also where this big wick that did actually sell off pulled back up too. We always respect that. And obviously, this is also the level that caught the big fall from the previous high. So if we see a breakdown below this level, I think that probably the 25.80 area here is the likely target. But we would probably expect that if there's any sort of momentum whatsoever, it should find there is buying power here. Obviously, the wick is showing us that. If we get a bit more market movement, I wouldn't touch it personally until it was trading above the 20 moving average again. So if we find some consolidation around this zone, some buying kicks in, and it does actually get above that 20 moving average again, I think you can start looking to those highs around that 38.
All right. Well, that's that one covered. Last one here we've got from Jordan is EURUSD.
Yep.
Nice currency trade. Oh, no, that's not going to be a good one. I'll take it. One sec.
Here we go.
EURAUD. I've got it up if you want. Yeah, you got it. Yep. All right. So, yeah. Okay. So this is a cross pair. Now, whenever you're looking at cross pairs, I remember trading the Beast, which was the pound odd. back in the day. Traded that a lot. And EUROAUD was also actually quite a heavy trade of mine. Now, because it's been kind of stuck for a while, we've got kind of a clear supply resistance around 166. Then we've got a little bit of a demand sitting here at these lows. I would say it's at a small level of resistance based on my analysis. Just quickly, Ty, this level here is coiling. So 164, 165, basically 164.90. It's supply on the left. It's resistance on the left. So to me, it's coiling. Small time frame.
It's got everything. It's got, look, this is extraordinarily. I mean, when you look at the support that this is had at all of this level, you can see it was resistance all the way through there, support all the way through there, and support all the way through there. Now it's broken through and it's testing it from above. I think it's a very, very key zone for this, and 20 moving down, bearing on it as well. If it gets above this level, I think it opens itself up to a move up to that 166, like Tom says. But if it fails to get past this resistance, which was previous support, the likely scenario is probably going to test these lows again.
Yeah. I've got another one here. Just there's couple of quick questions coming in. I'll just switch the screen over it, just if you guys can see it. Netflix, our thoughts on this. Ever since the earnings, it hasn't really put in too much strength. You can see it's never been able to take the 580. Around here, there's a potential of there was a buyer, but you've got to be a bit careful about buying the dip on these types of stocks because it didn't really recommence above here. It did find a little bit of strength here, then it kind of failed, then it's sitting around. So I think that Netflix could be looking at still lower lows. There's a big gap. So if you look on this chart, there's a huge gap all the way down to this price of 492. So 492, not super strong. If it has blanked, then there's nothing I can do. So, well, I've said the levels of Netflix anyway, so you guys can see it. Anyway, it is what it is. Can't share the screen tonight, it looks like at all.
We did see a little bit there. We did see some Netflix action. So no, that was okay. Blank screen. Yeah. Okay. All right, guys. Well, look, thank you for that. I think we'll leave it at that. Sorry for the technical issues that we've had tonight, but we got there in the end. And let us know. Do you prefer the white chart or Tom's black chart? Certainly, we would like to know now that you've seen both. Happy to take any feedback on board. So please let us know. But look, thank you for taking the time out to join us this evening. Trade with caution over the next few days, knowing that we have got a non-farm payrolls in front of us. Still some very important earnings coming out over the next couple of days as well. So we look forward to seeing you all next week at the same time on the same channel. And once again, if you have any feedback or any requests that you'd like to see in these streams that we do each and every week, please let Pepperstone know, because we are about bringing you the most popular and usable product that you can actually take away with you to help you on your trading journey. So thank you again from on behalf of Pepperstone and Thomas and Tyrone, and we'll see you next week.
All right, guys. I'll go get those hamsters working so we get that internet going on next week. All right, catch you guys. Bye for now. We'll see you next Wednesday. Same place, same time. 8 p.m. AEST, I believe it is now, Ty. Join us. Click on the links in the description below. Give it a thumbs up while you're on the way out. Thank you so much. Good luck out there. Vol everywhere. Get ready. All right. Catch you for now. Bye-bye.